following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. The first chart we're going to look at here today is the DAX index. And this is where the rally started last night. It occurred when the Italian central banks bailed out two of the Italian banks that have gone under. There's supposedly more of them out there, but they put in, I believe, 17 billion euros, and that was enough to get them out of hock, I guess. And then they sold their assets off, the working assets off to a couple other Italian banks. So I don't know if that's the start of anything to come or not. I'm not sure. But at least that was the start of the rally. And we did make a big ABCD pattern last night, folks, when we made the highs of the day up here at 2442 here in the S&P so far, and in the NASDAQ at that 5844 level. So those are, whether they're interesting or not, I'm not sure, but that's where we are. We are still looking at some very strong divergences in the Treasury bonds and Treasury notes, like we pointed out last week. As you can see here, we've broken out on the upside to the in the Treasury bond market, but the notes have just barely made the 61% retracement. It hasn't taken out the highs of the 18th as of yet. This is all related to a potential deflationary scenario, folks, because if you've been watching, we've had some tremendous breaks in grains over the last few days, and then again last night in silver and gold, both gave up the ghost. The silver and gold were not much of a surprise because we talked about that on Friday when we were looking at these 382 retracements that we were getting in both silver and gold. And since that time, silver has dropped well over 35 cents an ounce, and the gold has dropped quite a bit also. Gold was really interesting on a very short-term basis last night. I wanted to bring this out to you because it did have some type of a chance at one time last night because it had made a really nice ABCD pattern. As you can see, I put it off into a little red box so you can see it. The high of that move was a $17 rally to the upside, almost exactly to the tick. And as you can see, that ABCD pattern was holding really nicely. And this is a 15-minute chart, so it stayed there for 2 hours, with the low being 1254. And then, of course, once it went below 1254, that was it. And we went all the way down to the 1236 level, which is down, $24 from the high that we made just the other day. Now, the longer term, this tells us that the gold and silver do not look very well, folks, and platinum is the same thing. It's also looking badly. So whether this is related to the fact that interest rates are going to go lower and not higher, like I think, we'll have to wait and see. But we did break out to the upside on that range that we'd had in bonds when we got above the 156.23 level. We got up to 157.01 so far this morning. The 382 of that whole move comes in at 157.19, I believe. So that might give it some resistance. But what's really amazing is the fact that the notes are lagging so very badly, and they are 5 times the volume and open interest of the gold or of the Treasury bond. So I would really, I'm looking at that, but I'm just amazed at it, so not to worry. Okay, let's move on to a couple other things that we need to do. One of the things that was brought to my attention over the weekend by several people was the fact that Deutsche Bank has been in the news again, and I would like to mention this a little bit because this was one of my favorite subjects regarding Warren Buffett. He always said that these derivatives would be the weapons of mass destruction in the financial markets. And if you notice here, this little diagram that looks like a sophisticated clock, in the middle is Deutsche Bank, and then as you can see, all the other banks in the world that are affected by what Deutsche Bank does. the systemic risk in Deutsche Bank is reported to be somewhere between 2 trillion and 100 trillion. Now, that's a little bit of a spread, but you don't really know because these are off books. They're not regulated. Most of this stuff is not regulated by anybody. So, some of these guys don't have any skin in the game because they can't take the other side of the trade. So this is a really potential bad thing to look at. Now, how do you handle anything like this? This is a rumor. We don't know anything about rumors, do we? But we do know the price of Deutsche Bank, don't we? So if we take a look at the price of Deutsche Bank, just on a really long-term basis, we'll just put it up here and take a look at it. And you can see here we're trading at around 1660 or so. You'll notice that the last rally high that we had in January was a 382 of the high that we made back in June of last year, of 2015. The key here is that if Deutsche Bank gets below 12, in other words, if it breaks out those lows that we had down here at 1245, if it gets below 12, this chart's going to look like Lehman Brothers and Bear Stearns, and that's not a good thing because both of those stocks certainly didn't make it. So watch that very closely. I keep an eye on Deutsche Bank every day, but maybe this rumor, maybe it's fact. I don't know. All I know is that if it's real, the people will be dumping, the Deutsche Bank very easily. And if you remember, just a few weeks ago, they gave the folks a really wonderful value here where they were giving them hold on one second here so I can get this chart in here. You can see back in February, Deutsche Bank was offering their stock at a 35% discount. Well, you're talking about there's a $20.50 stock, and they're selling it, for 15 or 16, and pretty much that discount is dissipated now. So that's another question. Why did they do that? So just keep an eye on that stock because those are the ones that you want to watch. When we were going down in 2008, many of you remember here at TFNN, we were quite bearish at that time, especially when Lehman Brothers broke 19. It was just, free-for-all to the downside, and then Bear Stearns, finally followed after that. And remember, it's been 10 years since that happened, so a lot of you guys have not been here for something like that, and whether it happens in cycles, we'll have to wait and see, but that's what it looks like on the Deutsche Bank side. But you want to wait to see the first part was when it gets below the 15 level, and then after that, it will be heading towards 12, and below 12, it looks like it's going to go to 1 or 2. So that's the one thing that I'm sort of watching as we look at these markets here this morning. We've had some, I wanted to bring this one other, we've had a request here about the Hang Seng Index. I just wanted to bring this up and show you. We've been up here now for 3 weeks at this Hang Seng Index. It hasn't taken anything out as of yet, but it's still setting right at that level. We're going to have Rich Anderson as our guest here today, and tomorrow we're going to have Cy Monley from Sylvius Financial out of Chicago will be our guest, and Wednesday will be Shane Smolian. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've had a question about whether this could be a major bottom here in gold. I suppose that it could be. I am not of the belief that it is. Basically, once we came down below the 1254 level, that pretty much put a negative tone to the market. And this is what I was looking at over the weekend. As you can see here on the far right, you'll notice that ABCD pattern that we had, that was that $17 rally that came up to the 1290 level. And if you measure that ABCD structure down, it's going to take you down to at least the 1230 to 1224 level. That's also a possibility, but we're looming as a double top here from April to June, folks. That's just about as perfect as you can get. You had an ABCD structure going right up into it, and then it has given up the ghost. So as bullish I've been, I gave up being bullish on gold. Once it got down, below that 1254 level, and to me it looks like we are heading lower. Now, what would change my mind? It would have to reverse today, and I mean the whole day, and that's down. It was down about $14, and we're still down quite a bit, but maybe it'll come back and reverse. Then I'd be able to look at it. The problem we're facing, folks, is we're looking at some really negative prices in the markets. Look at corn and soybeans and soybean oil and soybean meal, even the wheat. If you remember, we were looking at wheat at that head and shoulders pattern, and the Gartley pattern that we had when wheat hit 506. Wheat's trading below 590 now. So there's been a lot of selling coming in. That's one of the things we want to talk about when we have Rich Anderson on the line here at the break. But that's something that looks really interesting. As a matter of fact, all the commodities are getting hit, and of course, one of the most bearish of all the commodities, of course, is the crude oil. And we're coming into some really good cycle stuff in crude oil, but frankly, just like gold, this thing could give up the ghost, and you could be heading down even farther to the downside. But if you look at either the long term or the short term in crude oil, I mean, short term here, you can see the ABCD structure that we have. Those are perfectly symmetrical, by the way. 1, 2, 3 drives to a bottom. The ABCD structure is equal. In other words, AB on the downside in time, CD on the downside in time. And then if you look at this, on a longer term basis, just take it to what we would say a longer term chart, like a weekly chart. We'll put this up and let you take a look at it. You'll see that on the weekly chart, this doesn't look half bad. Because you're going to see some very interesting swings. If you'll notice, back in May and July last year, 2016, we had the break, from 51 down to 40, dropped $11 a barrel. And what have we done now? We've dropped $11 a barrel into Friday's low. So whether this is a bottom or not, I'm not sure, but it has some cycle components and some price components that says, well, I should take a look at it. And remember, everybody knows how bearish the oil is. There's a glut of oil out there. We all know that. But the whole world knows that. But whether the market can rally from here or not, remains to be seen. That's the thing. You're correct. No one talks about the negative implications of low oil and gas prices, along with other commodity prices, folks. Because if you have deflation in the commodities, that means the products that these people are buying, whether it's cotton or any of these other things, that's not a good sign. So we want to, keep an eye on that, because if they keep collapsing like this, there's something out there that we're not seeing, and maybe that's the reason why the bonds are so strong, that everybody wants to go, for the safety of the Treasury bonds, which to me is absolute mystery, but that's neither here nor there. Now, someone asked a question about the relationship between the Canadian dollar and the crude oil, and I've gone and I've taken back a year and a half, and I just wanted to show you what it is. I mean, there is some correlation, as you can see here, but it's very difficult to trade against it, because there are times when you see that it doesn't follow, and other times it follows perfectly. So my premise is, trade the one that you're involved in, and don't worry about the other one, because if they do line up, that's great. If they don't, still take the trade, because it's just a pattern. It doesn't know whether it's going to work or not. So just do the pattern that you have. Intermarket analysis is really tough. John Murphy wrote a book about that. And he mentioned in there that, many times, even though things look perfect, like Dr. Copper, Dr. Copper's been, really good at predicting what the stock market's going to do. And then it goes in periods for 6 or 8 months where it doesn't do any predicting at all. So these things shift back and forth. So trade what you see, not what you believe. That's the main thing that I would be, paying attention to as you come in here this morning. And we're going to be opening here pretty strong with a pretty good move here this morning. We got bonds making new highs again. And remember that 157.19 is the 382 retracement of the whole move. So that's going to be an interesting one to look at. As we look at the currencies, we're having a rally here in the euro. It was down and up. It had pretty big swings last night of 40 pips up and down. And now we're approaching the 61% retracement in the euro up here at this 112.25 level. We're trading at 112.12 now. So it's interesting to see if it's going to work or not. So we'll keep an eye on this just to see if it's going to work. Okay, this is okay. One other question. Oh, the question about Apple. Apple has been a weaker than market stock, folks. It's it's barely rallied to a 382 retracement of the move down, whereas Amazon and some of the others have rallied up to either 61% or 78%. And with today's action, there's a possibility we could make new highs in the Nasdaq. But the Nasdaq has some pretty what we would call strong resistance at this ABCD 786 level at the 58.45 level. And of course, if it gets much above 58.60, you would say this is wrong, and you'd have to move, to the next stop and see what's going to happen with that. We have we have some ABCD structures in the E-mini that we've already pointed out to you, and there's also the same thing in the YM where we're having the market's getting up into this 124. Let's try it again. 21. Oh dear, I keep losing the numbers. There's so many. It's around 21,420, I believe, is one of the important numbers in that one. But we're coming into the opening here in a little bit. We're going to have Rich Anderson as our guest here in a half an hour, and he's going to be talking to us about some of these commodities. So we'll spend more time with that as we come on. But this deflation could be, a major thing to be paying attention to for sure. So just remember that it's very important. Tomorrow we'll have Cy Monley on from Sylvia's Financial, and Wednesday we'll have Shane Smullian on, and then we'll that's it, our guest for the week. And then the following week there won't be anything because of the 4th of July. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line. Rich, are you there? Hello? Well, maybe Rich disappeared. Who knows? Maybe it's a network connection. I'm not sure. Rich, are you there?
It's got to be a network connection because I'm here.
There we go. I hear you. How you doing, buddy?
Good, good.
Rich, guess who we're going to have as a guest tomorrow on my radio show?
Who?
The old employee that used to have Cy Monley from Sylvius Financial.
Oh, he'll be good. He's a real smart young man.
Yeah, he certainly is. You were his first job, he told me. When he first got out of college.
Although back in those days, I was a little tough.
Yeah, that's what he told me. He said you were tougher than a junkyard dog, but boy, he's sure gone on to great things. Anyway, Rich, the question that we're asking the folks today in the Tiger Den is this deflationary thing that we're seeing in the grains and crude oil and just about everything. You got any comments on that? I mean, what's your feeling here?
Well, there's a lot of product in the world, whether it be crude oil or grains. But the grains, the amount of excess can change very quickly because it's all about weather markets. Right now we look great here, but it's not just the weather here. It's the weather in Russia, Europe, China, Australia. So, we in Canada, we're constantly watching all these things. The oil market, it's, the swing producer today are the frackers in North Dakota and Texas, in the Permian Basin. Mm-hmm. But these are temporary things. I think Fed Governor Williams out in San Francisco mentioned the same in a speech in the last day or so, that they hasn't been any increase in wages that they had anticipated there would be. As there's very little unemployment. If you're college educated, the unemployment rate's way down there. Mm-hmm. The challenge going forward is, what are we going to do for all the people that don't have college degrees as we get more sophisticated? Look at Amazon's focus on what they think their new fulfillment centers will be. It'll be like a beehive where all these drones will go into their little port, and you're not going to have workers going up this silo. It's going to be robots, and you're going to see robots taking over the Whole Foods, and that's going to displace lots of workers. And so we have some major challenges ahead in the future as more and more of these robots. In 2013, there were like 1,000 robots in the 20. What I read was there were 1,000 robots in the 20 high-tech fulfillment centers that Amazon had, and by the end of last year, there were 38,000 robots. These things go 3.4 to 4 miles an hour. And they don't take coffee breaks. They don't go to lunch. And they have about 60 fulfillment sites, and eventually they'll be all high-tech. And then with the drones, we have some real challenges for the lesser educated part of the population. And what are we going to do? In the state of Hawaii, they're currently exploring universal basic income for all the people. They're looking at that idea. In Silicon Valley, they're looking at that idea. With artificial intelligence and self-driving trucks, you could have 4.5 million drivers out of work.
Yeah, I know
that takes the edge off inflation, particularly in the salary part.
Mm-hmm. These drones they don't have, and robots, they don't use health insurance, which is another large experience. Rich, tell us about the weather pattern that we were looking possibly, because we heard some rumors that this heat that we're having in the Southwest was going to move into the grain belt. I mean, we hadn't seen that happen for many years, but the weather up there is nearly perfect, isn't it?
It's darn near. We had pretty good moisture. If you look at the 5-day precip maps, it's mostly green. Some of it's darker green or blue, which means quite a bit of rain forecast for the next 5 days. A light green means that there's a 25% chance you get moisture in the next 5 days. When you're looking at these colorized maps, they don't tell you a lot. You really got to get in depth. But there is this tendency for at this time of the year for weather patterns to change, and weather does move from west to east because you have the jet streams, so that's entirely possible. We have beans at almost I believe, a record short. So were we to get any weather problems, there's plenty of ammo to cover positions. And then on the wheat, the commercials have their shorts down to the lowest level they've had in 2 years. Mm-hmm. So they know that, something could be up, but it's mostly up with regard to protein in the hard red winter, where the protein 11% is delivery in Kansas City, 10.5% is the lowest you can deliver, and some of the protein has been 8.5% and 9% in Oklahoma, Kansas, and Texas. And so they're going to have to come to spring wheat to get their blend, which spring wheat in Minneapolis, 13, 14 Pro, or else they'll have to go up to Canada. But generally when North and South Dakota and Montana getting the spring wheat areas getting the weather problems, it often goes up into the Canadian prairies. So we'll have to watch that closely.
That Minneapolis wheat was the one that made the wheat market have such a pretty good rally here, but now we're down, we're down over 20 cents from the high now in the wheat. Has Minneapolis wheat started to sell off also?
No, it's up for the day. I mean, the high is 76. Last night it's 65, 66. It's still 1-2 cents higher, even though the Chicago's lower. In 2008, Minneapolis wheat went to $24 a bushel because they needed that protein, and in 2011 went to $10.55. So while Kansas City wheat's a couple bucks cheaper than Minneapolis, it could be 3 or 4. I mean, you just pick a number, because when the millers need that X amount of protein to make their bread or cookies, they're going to get it, and doesn't matter what they have to pay, they're going to get that protein, or their product doesn't work. It doesn't taste the same. It doesn't cook the same. It doesn't look the same.
It's the protein value of Minneapolis wheat is different too, isn't it?
Yeah, it's hard red spring wheat has a much higher protein, 13.5%, 14%. So you can buy some of that and add that to 10.5% and bring it up to 12 or 11.5 or 12. However they blend it. And in the elevator business, blending is a fine art where that's where you make a lot of your money.
Okay, Rich, is there anything on the board that really strikes your fancy as far as wanting to be a buyer, a cattle, hogs, anything that has your interest? Boy, you have to think about it. That's a bad sign.
If I was going to pick something, I would go to the back end, to say December cattle. But the answer to the question is nothing that, I don't see any 5-star trades that have very low risk reward. Your idea on the crude oil, I mean, you're taking a shot at a level and you got a close stop. That's not all bad. I've got gold and silver to watch closely. The corns, they may want to take it and retest last summer's lows, but then I think they'll have trouble keeping it down.
Stay with us. We'll be right back. Rich Anderson of Anderson Capital Management. Thanks, Rich.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're with Rich Anderson of Anderson Capital Management, and we have a question from one of our listeners, Rich.
Sure.
Do you use any ETFs when you're doing the? I know you do a lot of. Of course, I've known you for forever, but do you do any ETF business in like the corn ETF or the cattle ETF? And what do you know about those? Because I know virtually nothing about ETFs. Can you share some information on those?
Sure. Like when I was at Smith Barney, there maybe were 150, 200 futures licenses and 12,500 stock licenses. So they had a little limit on who could participate in the commodities. So they came up with something called exchange-traded futures, exchange-traded funds, ETFs. And they're perfectly good for your average person that's working with a broker that doesn't have a commodities license. They don't give you the leverage. The only reason to trade futures, one of the primary reasons is the leverage. And the ETFs, being in the stock world, don't give you the leverage. But they work, they track the markets and they work just fine. By the way, the question of the three markets, I just looked through stuff during the break. If sugar took out today's highs, if cotton took out today's highs, I'd be kind of interested in those, and I like the action in coffee. Now, those are all three markets that I don't trade very often, but they've got my attention based on the charts. And the cotton, it could be a weather thing. Modi's in Washington, and India's going to need sugar. So it could be a kind of a political thing where they start saying, hey, we're going to do something with the sugar. So those are three. Two of them are they're all three have been sold off hard. The coffee's starting to bounce back, and the other two, that's the numbers that would light it up for me.
Okay, that's good. Now we have one other question regarding the livestock markets and delivery of contracts. I haven't been involved in that stuff in about 25 years. What about if a person's coming into delivery? Don't the brokerage firms just about shake the tree and tell you to get out of it before you come close to delivery?
Oh, absolutely. So your average person can't be in June cattle right now, which have another week of trading, and they're in a delivery month. So if you're at a TD Ameritrade or wherever, they don't want their clients messing with that. That's for commercials. That's for professionals. So there's only a handful of firms that would even allow you to be in that. That's why you have the Goldman roll by prospectus, all these funds that roll the month prior to the delivery month so that they have no issues, and that's the way most managed funds are often run also.
Mm-hmm. I remember back in many years ago, they used to have those egg contracts, and Milo King was the guy that ran that market, and people get delivery of eggs, and it was an absolute disaster, and it ruined the contract, didn't it?
Yeah. Because it was a rail car sitting someplace you have no idea where, and what if the air conditioning goes out? Then you've got a bunch of spoiled eggs, and I don't know if you've ever smelled spoiled eggs before, but you know it when you got them. They really
just like sulfur, just like pure sulfur, that's for sure. Rich, we have another question from someone regarding the silver market. And, silver went down and stopped at a relatively good support the last night around the 786, around that $16.25 per ounce. The question that they're answering is, they hear these stories on the tube about $200 silver and $100 silver. That is all basically cannon fodder for some type of a scam, isn't it? I mean, before silver gets to 100, it's got to get to at least 25.
Yeah, that's just marketing scare tactics about currencies. It's like these people that want you to buy Bitcoin. Well, Bitcoin's one of, say, 200 to 300 cyber currencies. Bitcoin is just the Charmin of toilet paper. It's the most known name of cyber, of the cyber currencies.
The Charmin of toilet paper. This I like. This I can put a handle on this one. What is your feeling on since we're talking about Bitcoin? I've seen the charts on it and stuff. It goes from 150 to 3,200 or something. I don't even know where it's trading now.
Right. But, I don't know the symbol. The key thing that I like about it, Larry, is the blockchain technology. The banks are going to be using that now. I'm not saying they're going to be using Bitcoin's blockchain technology, but that blockchain technology should make the world a more secure place for the financial institutions and the transfer of money and securities. The technology is what I like. Most of or I shouldn't say most, but a good deal of the trading that goes on in that is, that they abduct somebody and they want to be paid in Bitcoins, or they're cyber, hacking your computers and they want you to pay in Bitcoin so it can't be traced, and that I don't like about the thing, and we have an issue there.
Yeah, I only met one person in London in last May that actually did anything in Bitcoin. I've never met anybody else that's had anything to do with that. A lot of my old buddies that I'm still in contact with are in the coin business, and none of them have done anything either. So it's still relatively new, I suppose, to most people. I certainly don't understand it, but there's a lot of things I don't understand.
They had somebody on Bloomberg had somebody try and live for a week in New York on Bitcoin, and while they were able to accomplish it, none of the bars took it, so they couldn't go have a drink.
Yeah,
as an example.
What about the situations for the exchange listing? Is Bitcoin going to be trying to be listed on any exchanges? Have you heard anything to that effect?
Well, it's traded someplace because there's a chart of it, but I'm not, I'm
probably on
anything where one of the primary uses is for ransom, I stay away from.
Yeah. That's not good. Then you're promoting terrorism, and you don't want to get involved with that. That's for sure. Hey, listen, I want to thank you for coming on, and if you have any, good information like you usually do, drop me an email, and I'll forward it on to the folks. But I want to thank you for coming on, and I'll let you know how it goes with Cy tomorrow. He's all excited. He thinks he's going to be a rock star.
Oh, he is. He is.
Oh, he's a really super nice guy, but he's certainly thinks the world of you, buddy. So you helped him out at one time, and he likes it. But anyway, thanks for joining us, Rich, and we'll have you on again soon.
All right. Thank you. Trade well.
You bet.
Bye-bye.
You bet. Okay, that was Rich Anderson of Anderson Capital Management, and we're going to have one of his first, someone he hired 20-some years ago, and he's made it quite successful. Shai Monley from Sylvius Financial, who does a huge amount of hedging, plus he does crop insurance for many different things. He has a good handle on what's going on with the fundamentals. He'll be our guest tomorrow. We've got the market is still rocking and rolling. We got the Dow up about 100 points. The bonds are getting very, very close close, another 10 pips, and we'll be up to the 382 retracement at 157.19. That's going to be a really interesting one to watch because there's some ABCD structure there. We made the 1.27 and 1.618 in the S&P at that 24.46 level. And, of course, we went a little above it in the NASDAQ. The number we were looking at in the NASDAQ was coming in at around 45, and we got up to 52. We're trading at 44.25 right now. So we'll want to watch that today to see how things are going to go. So we'll take a break, 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've been asked by our good friend Mr. Z to take a look at the Christmas corn. That's new crop corn. As you can see, we closed at 374. I'm looking at a possibility of getting down around the 370, about another 5 or 6 cents lower. At that point, I'd be willing to become a farmer, because at that point you have a 1.27 expansion of the last month's range, and you also have a 78% retracement of the whole year. The problem that we have here is the fact that this thing has been in a big downdraft, ever since it made the big ABCD pattern up there. And now it looks like we're in an area where it should be some support coming into that area. And we'll see if that's going to be if that's going to hold or not. But at that point, you don't want to risk any more than a nickel. 5 cents is enough. That means you get to be a farmer, for a very, very small amount of money. You don't have to have a tractor. You don't have, a loan at the bank or buy seed or anything. You don't have to worry about crops or anything. So that's the real beauty of when you're trading futures. But you've got to be able to, to protect yourself, whether it's, the stock indexes or futures or whatever you're doing. You just always have to protect yourself, because you never know, which one is going to work. And that's the whole key to this. Is it's not about how much money you make; it's about how much little you lose when you're wrong. And that's the whole thing of walking through what you're what you're looking at. So those are things that I think that are important. Whether that is the case or not, we'll have to wait and see. But that's what I'm watching here to see what's happening with these with the corn. The same thing is with the beans. Beans and meal are in new low ground, so there's no reason to really come in. We had that new moon and perigee on Friday. Nothing really happened, and today they're lower. I mean, that's not a good sign, boys and girls. So you want to wait to see that more support comes in. Then you'd be able to give a better idea what the market is going to do as we come into these key levels. But around 370 in the Christmas corn, Mr. Z, is what I'm looking at. And I think if you buy it here at 376, I wouldn't risk more than a couple cents. It's a little too much. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.